But, well, HCLTech reported a good set of third quarter earnings. They beat street expectations in both revenues and margins. My colleague Reema caught up with Prateek Aggarwal, Chief Financial Officer, and Ramachandran Sundararajan, Chief People Officer at HCLTech, and began by asking them on the quarter gone by. Listen in.
We had quite a sixer of a quarter, and it was led by three things to really distinguish. Number one was a solid outperformance by our software division, which clocked a solid 5% year-on-year growth. On a sequential basis, it appears as a 32% growth, but that's the seasonality, and 5% year-on-year is the right way to look at it, and that itself is a good number. The second one was, the mega deal that we had announced in the previous quarter, 10th of August to be precise, and that deal ramped up on schedule from 1st of November and therefore contributed 2 months in this December quarter. And the third one was also similar, 2 months extra contribution by the ASAP acquisition, which we had done end of August and which had contributed 1 month revenue to the previous quarter. And this quarter being the full 3 months was an extra 2 months. And apart from this, all the businesses continued. And ER&D, for instance, apart from the ASAP extra revenue, also grew 2.5% sequentially on an organic basis. So all in all these factors combined to the sixer of a quarter.
Well, that's nicely put, sixer of a quarter. Prateek, can you tell us the exact contribution of the Verizon deal and the ASAP acquisition to your top line this quarter?
So I would not want to talk about client-specific numbers for obvious reasons, client confidentiality. But suffice to say that it was obviously the major part of the growth in the services segment. On the ASAP, of course, it's a separate entity, and at the year end, when we publish the subsidiary results, you will see that it was extra 1% was the contribution. We did call out the 6% total includes 1%, and therefore the organic sequential growth is 5%.
You have lowered your full year growth forecast to 5.5%, Prateek. Given the momentum, do you think you will be able to end the year at the upper end of the guidance?
So we actually called out the ask rate as well, like the cricket commentary goes. So the 1.6 to 3.5% in the services segments is what it takes for us to achieve the 5 to 5.5% growth at a company level. And that includes the confidence for that comes from three factors, apart from the overall business growth as well. And those three being Verizon was only 2 months in this quarter, December quarter, and March quarter will be full 3 months. So that would give 1 extra month of revenue from that. The second is, of course, the ER&D continues to do well. And the third is, in the December quarter, we did call out a significant amount of furloughs, which led to lower revenue. And that should not be there in the next quarter. It will be very small compared to the previous quarter, and that itself is a tailwind for us. So 1.6 to 3.5 in the services segment is what we are penciling in for the next quarter.
Fair enough. And your margin performance at 19.7%, there is an expansion in margins. Can you break up the margin line item for us? What led to the increase?
So we had a 130 basis points increase quarter on quarter. So 18.5% was the September quarter, and this quarter came in at 19.8. And the increase from PNP actually contributed 180 basis points, 1.8%. And the services actually went down sequentially by about 50 basis points. 65 basis points was just the increments that we gave to our the large chunk of our population this quarter. And we got, so that basically contributed to the 50 bips decline in this quarter. But over a period, of course, we'll make it up with the productivity that we normally do.
Sundararajan, the attrition continues to trend lower for the company at 12.8% in the current quarter. Will it continue to decline? Where do you think it could settle in the next couple of quarters? And can easing supply side be a big margin tailwind for the company even in FY25? For instance, earlier, the company's guidance used to peg the margins closer to 18 to 20%. That used to be the guidance. Then once this entire, hiring boom came in, the company lowered its margin guidance to 18 to 19%. Can we go back to the earlier guidance levels of 18 to 20%? Is there visibility of achieving a 20% margin going ahead, say next year, given easing supply side situation?
So good morning, Reema. The 12.8% this quarter is the lowest in the last 7 years, if you exclude the FY21 lockdown period. So to that extent, this is the lowest attrition in many, many years. Sequentially as well, it's a drop of 140 bips, and year on year, it's almost a 900 bips drop. So this is a very good quarter. Looking ahead, if we are looking to see quarter on quarter growth, which is what we are seeing, there is going to be increased hiring activity in the market. So the demand supply situation is likely to move in a direction where there is more demand. So with keeping that in mind, it's very likely that the attrition levels will more or less stabilize at this current level. I would expect anywhere in the 12 to 14% range is where we expect it to stabilize, not really drop any further looking ahead to the way the demand is likely to be. So that's on the attrition story. The supply side, we still see increases in compensation. Although attrition has come down, hiring activity in the market has come down. But if you look at HCLTech, we have bucked the trend. Over the last 2 quarters, we saw a negative net addition in terms of headcount. This quarter, it's a positive 3,600 net addition. And looking ahead for next quarter, if you look at the forecast for the services business, we expect a net headcount increase next quarter as well. So which means we expect to see increased recruiting activity, both in terms of fresher addition as well as lateral hiring. If that trend were to continue, the supply side easing that we are talking about will also start stabilizing, and the skills in demand is also shifting, and the compensation levels for that is only tending to increase, not decrease. So that in itself is not likely to contribute to increasing profitability. We have to look at other efficiency measures and productivity for us to drive margin going forward.
Okay, that's HCLTech, one of the biggest movers today, up almost about 4% and talking about the business. But let's